The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Paddy and Pete and Steve. Hello, lads. All right. Pad, you there? You there?
Yeah, I'm here.
Okay, bring yourself a bit closer to the mic. Don't be shy. So, Steve already, Steve in Wales, you had to keep it local. Oh, hello, local now. You must keep everything local. Your haircut must be local to your head, right? Everything. Your shoes must be local to your feet and all that stuff. Now, Steve, they've said all of a sudden you don't have to be local now. You can walk around Wales if you want. Steve is gone. Straight away. I was like, he didn't give him a chance. He's gone. He said, I can't make the Weekend Podcast. He said, I'm going to Brecon. What? Brecon Beacons? I think he's joined the SAS. That's where they train. So maybe we'll give Steve a call, but it's like, do you know what? They'll be in lockdown. If everyone uses that enthusiasm like Steve to get out and about, they'll be in lockdown next week, won't they?
I hope not, but yeah, maybe. Good luck to him.
No, do you know what? I don't think we're in lockdown. If you see the figures, they've dropped off a cliff, haven't they? I mean, that's down to the vaccination, not just lockdown, because if you look on the roads and look about, there's not many people that lock themselves down, is there?
Not really. There's not really been a lockdown, has there?
No. So it's down to the vaccines. They are working. It just proves that Europe are idiots. We don't want we don't want AstraZeneca. No, it's disgusting. It doesn't work. Now they're saying, give us AstraZeneca. We will block the exports.
You've been practicing your French accent, haven't you? But it's still not quite there.
We are not exporting it. We like it.
Oh, that's better.
Okay. Last week we hated it. Oh, I did a bit of German there as well. So it was nice. I don't know if you saw that last game of the Six Nations last night, France against Scotland, and the winners were Wales. Yeah! Ooh! Yeah! Ooh! Now, remind me, Pete, did England take part this year?
Weren't they? Well, we've used it very much as a warm-up. So we're trying some different things.
It's a long warm-up, that, isn't it? Long serious warm-up. One of the biggest tournaments in rugby. They should take it seriously, I think. Rather than just warm up. Take it seriously. You know what I'm saying?
Yeah, but we've won it so many times. This time we thought, let's give other people a chance. Let's come fifth. At least we didn't come last.
No, that was Italy.
That's why we've always got to keep Italy. I know we've talked about getting rid of Italy, but no, actually, I think we should always have Italy because it means none of us will ever come last.
Yeah, I suppose. Well, if you do imagine that, it was close though. England, when they played Italy, they started struggling at the start, didn't they?
A little bit.
They're warming up again. Come on, England. What's going on there?
Can I just say the greatest moment of the whole championship was the interview with Wayne Pivac afterwards? Sat in front of his grandmother's, curtains.
I saw those curtains. They were cracking curtains, isn't they? They're like a rugby club curtains. They're proper curtains with tassels on the end and everything.
Yeah, with a really cheap, pull-up screen with the Six Nations branding. It was like the worst bit of branding ever.
I know, it wasn't quite covering the curtains. No, I tell you who did worse. I tell you who did quite worse than that. Talking about presentations and all that. Is Alex Salmond. I was watching that live yesterday. He's launched a new party called Alba. Right. First of all, the name Alba. What? What's that about? And he started off. It looked like someone hadn't.
Word for Scotland.
Yeah, it looked like someone hadn't switched the studio lights on. It looked quite dark, Put the lights on, someone. And then they decided to go to this inspirational, video of the party. It was like an overview of Highlands and people marching. But someone in charge of the computer was obviously messing around, checking the Zooms, seeing people were on Zoom, and you could see all the programs flashing up over the thing, and he wasn't going back to the video, then back to the programs. So, stop messing around with the computer, you fool! This is supposed to be a rousing moment for Scotland, And then it went back to Alex Salmond early. He was just looking down at his notes for 5 minutes, and, and they went for questions, and the questions, they'd speak, and they'd cut out, and then it'd buffer, and then someone else would come in with another question. He'd talk over them. What the hell? If you want a way of not to launch a party, this is textbook. This is absolutely how you... And in the end, even the BBC, right, well, we'll leave that there. We'll move on to something else. Let's go to the boat stuck in the Suez Canal. And it was just dreadful. Absolutely dreadful. And I thought, if that's symbolic of what's to come, then that's doomed, that thing. I tell you this week, boys, it's been painful in the markets, isn't it? And it's also been painful...
Ideal.
Yeah, no, it's also been painful in my mouth, right? And I don't know what was more painful. I had a wisdom tooth that was deteriorating. It was infected. And last week, I don't know what happened. I had cold sores on my tongue and everything. My mouth was really hurting all week. So what's going on? It affected my whole mouth. So I went to the dentist, an emergency thing. I've never had a wisdom tooth pulled out in my life before. Have you ever had that?
No.
Oh, I tell you what, the guy in there obviously gave me some injections first, the anaesthetic, right, in the thing. And that
The guy in there.
Well, I was questioning whether he was a dentist, but he put the anaesthetic in. First of all, the needle has to go in the sore bit, of course, and then straight away it numbs it. But so he got this sort of monkey wrench out or something like that, similar to a monkey wrench. He was forcing my jaw down. I thought my jaw was going to snap. He had his knee on my chest, pretty much, pulling like here. He said, "The nurse, so can you give me a hand here?" She went on the back of him, pulling as well. And they got a couple more dentists in to tug. The entire staff of the dental were all tugging away. They're asking people, walking past the dental surgery, "Can you give us a hand, please? Just grab on the back of this lady." And we're all tugged together. It took about sort of good 10 minutes to yank it out, and it was the wrong one they pulled.
All right, excellent.
no, but seriously, he showed me the roots. But I thought honestly my jaw was going to snap, and he had this. He's really moved my. I thought my skull was going to come out of my head. Out of my skin. I thought my skull was going to come out of my skin through my mouth. He literally was wiggling it around. I thought, I was going, and, it was really hurting. And
wow.
And all of a sudden, right, the pain went. So I was taking painkillers all week, doubling up on ibuprofen, back to back with paracetamol. I was eating antibiotics. And the pain just went. Even though he yanked it out of my mouth, a really painful experience. The pain
Isn't the human body an incredible thing?
Yeah, so I didn't even have any pain from the yanking out, the extraction bit of it. So nothing. There was that tooth that was apparently a nerve. It was affecting the whole mouth, and that's a bit like the markets.
There we go.
I wondered why you were being so elaborate with that story.
Yeah, which is
what are you saying? What the wisdom tooth is that ship?
Well, sort of, yeah. That's what I was going to say. That guy, you imagine, it was an awful day on Thursday, wasn't it? I don't know. And sometimes that happens. Markets, small caps, just sell off, or non-specifically. They all do. And you look at your portfolio, and all of them are red. And it's quite an emotional thing, isn't it? It's quite hard, and that's why people find it hard. The markets and the psychology of the markets. But you imagine being that guy. You imagine if he was British, right? And he was like a small cap investor as well. And on Thursday, he's hitting world news around the world. He's costing people $9 billion. He looks down at his portfolio and there's a sea of red. You couldn't have felt worse. He's like, oh my God. But no, I don't know why that happened. I don't know why the market sold off like that. Because AIM, and I posted on Twitter, AIM was the worst, market that day. It was like down 1.4%. And the rest were like not even 0.5%. And it's odd that happens.
A lot more than 1.4%. I was down maybe 10%.
Yeah, but someone said that actually. But the indices of AIM was, AIM was down the world. It was 1.33%. It was, but obviously that's everything. That's the winners and the losers, the non-movers. That's if you put them all in a bucket, it's all down. That's quite a lot really for indices, So. And
I wouldn't mind if the stocks I owned were involved in trading things in ships, but they're literally not.
Yeah, I don't know if
there's nothing in any ship that is related to anything I'm invested in.
Yeah, it wasn't purely that, was it?
No, it wasn't that. It wasn't that. I think Pat. I think I said that as a joke, but I think Pat. No, it wasn't that. I mean, even though he's costing like 400 million an hour, that guy he's costing. It was apparently wind he blamed it on, but obviously a strong wind, not his wind.
Oh,
that'd be different if I just broke wind and the lever went.
The lever.
That's a technical term. I just pushed the lever. It was just a strong break wind. No, but I don't know why that happens. And but we know, right? We forget about it very soon. And that's where the wisdom tooth. It was there, giving me agony for a week and a bit, and I was back to back. And all of a sudden, it's out. There's a big gap there. But it's gone, and I forget about it. And we have this with the market over and over again. And it's psychology of, and Paddy was saying a while back that when Steve kept saying he was hitting all-time highs. And so this is a bit of a worry, actually, because we know we're going to have a sell-off soon, because you can't keep hitting all-time highs. And our psychology is wrong when it comes to the markets. We are wired all wrong for the markets. Because like I said, when we're all bullish and the market's at the top, we think it's going higher. And generally, when everyone's like that, and you saw people posting on Twitter, in January, all-time high, Steve wasn't the only one, we all were, And when everyone's like that, I don't know what you want to do. If you're a trader, you take profit. I'm an investor, so I wouldn't change it. But and then now people get scared and fearful. That's the time to start topping up and buying. When people and when you are feeling uncomfortable, so you have to rewire your brain really and realise that's the bullish bit. Fear is your friend, really is.
It's just the available cash situation, isn't it?
Yeah.
That it's that thing of you've been buying hopefully at a good price and it has risen strongly, but you've used a lot of your cash when you're buying hopefully at a good price. It's now come back perhaps not as low as you bought it, but they are drop opportunities across the board, but you might not have a huge amount of cash to take advantage of it. But what do you do? I mean, it's if you've got 10% cash and you've got 10 stocks, you divvy your cash up into 10 and put a little bit in each one, and does it?
Yeah, I mean this is what I was thinking this week. Like of the stocks which have gone down, like Gfinity has had a shocker.
Yeah.
Even Escape Hunt's had a rough ride over the last few weeks, isn't it? Like, which of the stocks that we're invested in is the best place to put the small amount of cash that I might be able to stick some in? Or do we look to some of the newer ones that we haven't invested a huge amount in yet and use this as the opportunity to get a second tranche?
Nice.
Yeah, I think it just comes down to you got to look at percentage gain that you think you're going to make, and then you look at the market cap. That's that's how I look at it, and I think of how And generally, when I start, top slicing, and I want to buy another stock and I haven't got any cash, I'll start looking generally at the bigger caps. And I'm thinking, if I got a market cap there of like 120 million or 300 million like that, Ilika, is that going to double very quickly compared to something like a 10 million market cap? And that's
but it should be. It's tied to earnings, isn't it? It should be, in a way.
I know, but will Ilika, for example, I think it will do very well, But I don't think it'll double as fast as, say, a company that hasn't risen, that's, say, a 10, 20 million market cap. It won't, because Ilika's, it doubled on Christmas, the end of this year, it doubled. So that's the fast, easy rise in Ilika has happened. I believe that. We should have been, if you look at the charts here, and let's get the chart up, I mean, you always got to look for the fast, easy rise, because it's nice to be sitting on a fast, easy rise. There's fast, easy money to be made in every stock, and you see that. You like that, Pad? Like that? You fast, easy rise? Yeah. I see where he's going with that, Pad. He's got.
I was going to make a joke about your wife, but I
there's a time and a place for that.
Yeah. But
I kept it back.
If you look at it, right, the fast, easy rise was below £1 in Ilika, and it went from, in fact, from June last year. Everything. If you bought fear is your friend. If you bought anything after that dash for cash. March back in 2020, you'd be laughing, rather than just.
I think we were part of that, though. We benefited, didn't we? I've definitely bagged on that already.
Yeah. But Ilika, let's say, when it rose, it was end of this year, 18th. That fast easy rise, they were in one day went up by 56%. That's and you can see that in certain companies. It starts to rise, and there's no stock available, and and then all of a sudden it goes berserk. That happens, So. You always want to get in before that fast, easy rise on any stock. And so I'll look at big caps and look at companies that haven't had that big spike up somewhere. And the charts are ripe and right to go. And
what I'm saying is it's all relative, isn't it?
What I'm saying is it's all relative, man.
What I'm saying is all relative. It's all relative because, an Ilika has the potential to have very, potentially really great revenue streams in the future and be trading at a very high PE, potentially due to the nature of the sector or whatever. And so the valuation could be in the hundreds of millions, and that's okay because it could still double. Whereas another company might not have quite as grand revenue
potential. Yes, exactly.
Yeah, and so we'll have a lower. So you can't just base it completely on market cap. But I know what you're saying in terms of.
No, but they generally. I know, but it's a rule of thumb. Of course, you've got to weigh up the size of the company with the potential they have still. I still think Ilika. The reason why I'm in Ilika and Polarean, because I think they could be billion-pound companies, and that for Polarean is pretty much almost like 10 bagger, and that for Ilika is what 4 bagger now, 3 bagger. I don't know where they are. Let's check the market up. But again, when you even say that, you think, well, hang on a sec. See, but even so, it's not going to be as fast. It's not going to do it as fast as it did, go from 100 million to 200 million, because that quick rise happened quickly and very, and it was quite easy. Where we buy?
They're 266 million.
Yeah, exactly. 266 million. So, listen, 4 times your money is very good. That's not nailed on. We don't know if it's going to do that.
No.
But you're
staying in, but not topping up.
No, so I doubled my money in Ilika. I did, and I wanted a bit of cash for other things. So I did top slice on that. I thought it had a big, fast rise quickly. So you've got to, if you're in a stock and it's big, and it's a big market cap, and you think it's going to the moon, just look up, look at, seriously, how high can it be valued if everything goes right? And if everything doesn't go quite right, how highly can it be valued? What multiple is that to the market cap currently? Because to generate another 260 million of value or perceived value, it's not easy. It's not easy as generating 100 million like it did, when it doubled. So, it's twice as hard.
So the big question, where are you looking topping up? Which stocks in the portfolio do you think? Yeah, they've had a drop now, but they still have. You could have another ride.
Yes, but I've been. Do you know what helps when you try and?
You're right.
Yes, I've been doing. Prince Charles. Prince Charles is such. I don't know what gets my nerve. I'm sorry. I'm watching TV sometimes, and you get the royals come on, give advice on stuff, and we've had to. Why? You were just born. You've not done anything. Okay. What are you standing there for? And I think we should all do this. I don't care what you think. You don't know anything, fella. You just sit there and just open hospitals and stuff. And so I don't care. It's absurd. The whole royal family is absurd. The prince. They talk about, and that guy in the news there, Prince Harry's got this job, right? Doing some ridiculous impact manager or something in some thing. And this guy said, and the interviewer said to the guy, so what do you call him? So what do you mean, what do you call him? He's a human. He's not even called Harry. And he said, well, I called him Harry. I've never spoken to royalty before. This is like some Disney fantasy. It's not real. All they did was their relatives and families killed people faster than our relatives and families. And we value them for that, do we?
Okay.
As tangents go, this is quite a tangent.
This is up there.
Oh, it doesn't mind me not calling him Prince. What? You're a human, you fool! Like you, like me. He's not some born. He didn't come from the stars, dude, with glistening in gold. He's not a magical being. Anyway,
so, Pete, does that answer your question? Not really, no.
Exactly. What was the question? Sorry.
That's where you're sticking your money.
Yeah.
It sounds a bit weird now, but the question was, which small cap stocks in your portfolio are you?
I just watch TV. I think we're living in a really surreal existence. That's why I watch that.
You are.
How they treat these people, exalted. All they've done, they were born. That's all. I was born. We'll all be born. Anyway, so that got to me a bit. I was on a treadmill shouting at the screen.
That's true of power anywhere, isn't it? Like, it amazes me that people look up to prime ministers and to...
Yeah, but the difference is, I know the difference is there is, to a certain extent, I know, I find that as well. People just laud them and exalt them, but at least they've worked and become voted in, most of them, by people... Mm-hmm. They've done something. They've said, this is my policy. This is what I stand for. They've had to earn it in some way, They've had to spend years doing something to get there. They've got a bit of experience. They haven't earned anything. They're just born. That's it. So born, you just walk around and people are thankful to shake their hands and stuff. And what? I don't want to shake your hand. I don't care. Anyway.
Did you meet... were you there at Party in the Park years ago when we met Prince Charles?
No, I met Prince Andrew at the Radio Aid thing.
I was so drunk. We'd done the breakfast show, and I had spent the rest of the day drinking, and I was absolutely... what's the word I could use? I was very drunk.
Yeah.
And one of our co-presenters decided it would be hilarious to drag me to the meet and greet with Prince Charles backstage. And I had no idea what was going on. I was suddenly in a line. I had Dr. Fox one side of me and Chris Brooks the other side of me, and then Prince Charles came along, and Prince Charles started chatting to me about what I did for a living, and I couldn't get a word out, and I was just slurring. And then
you should have said, "What do you do for a living?"
Yeah, quite.
His photos, I think they were in the
I've seen the photographs.
Of me meeting Prince Charles, just Like,
Well, I remember meeting Prince Andrew, Radio A Day. I was in the studio with me, Johnny, Lisa, Tarbuck, and Prince Andrew. And look at that, and everyone's like, oh, people come in, security come in, and all that. I think, why are we actually Prince Andrew, for heaven's sake? And knowing what we know now, Anyway, back to where I put my money. So I've been doing these videos recently for the Share Pickers Investment Club. When you sort of re-go over things, you'll start learning again. You re-look at things, and I'm learning as well all the time, And I looked at some of the best winners I've had, and they've all come from that. And that strategy I have of sticking below, 20, 30 million market cap, 10 million, even. You should stick with that. And because I realised, like I said, there's the 80-20 rule. I put it in my head and make this simple. 80% of the year's best performers, last 5 years now, have come from below 20 million market cap. That includes Novocyte, last year, started at 9 million market cap, And if you put £1,000 in that, what would you have had back? I don't know, something like 100 grand, something ridiculous. Yeah, so it was a 60 bagger or something, wasn't it, Novocyte? So when you're fishing in the waters, do you know what? This comes into our strategy. I did that poll on Twitter and said, do you have a strategy? 61.4% said yes. 38.6% no, dear. Just attract something money. I've no idea, and it doesn't surprise me because it's sit down. People just want to make money, and. But if you don't have a strategy, you end up a bit like England in the Six Nations. It's like, sorry, Pete.
Just aimlessly, like kind of
wandering round. Is this a warm up or is this a warm up?
Strangers.
Yeah, someone shouting from the side. This is the real game, guys. It's not a warm up, is it? No. Oh, okay. I thought I'd just play hooker for a laugh. Right. So no, have a strategy, and when you look at that, someone in the club said, "Have you looked at maybe having a look at some turnaround plays? It's like Rolls Royce or something like that, or some of these companies, or TUI, or may bounce back." And I said, "Listen, because if you look at where the big winners come from." And let me just find something. What I've learned is
understand that thought process, can't you?
Yeah. No, I can. And if that's your thing, go for it. But be good at that. Specialise in it. So, like I said, if you're going to see, if I'm going to have a brain surgery, I don't want to do my local GP to do it. Because he's not a specialist in that area. If I want my house rewired, I'm not an arse of plumber. I want an electrician. So you specialise in something, you get better at it. And if you cast your net too wide, you won't have a focus. It'll be scattered. So I said to this guy, what I've learned is this: the market is full of opportunities. Too many, actually, to chase. Way too many to chase, because they're everywhere. So the key is to hone a strategy through experience in order to improve that strategy. To do this, I focus on an area of the market which I know produces the biggest winners. Why not start there, right? It produces the biggest winners. Trouble is, this area of the market also produces the biggest losers. So that's the nature of risk and reward. If you want big reward, you've got the risk can be big. So using quality filters, you can reduce these risks. You can obviously get out these dirty plays and the big losers. Hopefully, they'll not fit your filter, and then this will leave the big rewarders untouched. So you know what you have to look for. If you look at these ex-winners, previous winners, and then what are the traits that they have? And first of all, is the size. And then you look at other things. And there's certain things you look at, so cash, all that stuff. This is that 9-point filter I have. And this includes, that filter will include the winners. You may not get the best, or top 10 in the year, but as long as you're fishing in that area, in an area with lots of nice big fish, or going to be big fish, there's, you've got a good hit rate. So I think you've got to hone the strategy rather than jumping around the market thinking, I'll have a go at this, or have a go at the turnaround play, or you see some companies have a sort of earnings warning, they'll fall off a cliff by 50%. People just jump in trying to catch a falling knife. Yeah. And I see people just scattered strategies. No, have a focused strategy and become a specialist at it. Be the best. Be the best of the best, man. And then you'll do well. I mean, you don't have to be the best of the best, but I mean, you'll be more competent in that area than someone just jumping around with no strategy, So that's what I'm saying. So anyway, what I'm saying is, look at where I'm putting my money. I'm looking now only, and I've got to be disciplined in this, at companies sub, 20 million, around that level, because I know that's where the big winners will come from.
Okay, but then in this scenario where we're talking about, we've had a drop, and so yes, you might have ridden a fast, easy ride from 10 million, sub 10 million, whatever, might have got up to 30, 40 million market cap. It might have dropped this week to say 25 million, whatever. So that's above where you're saying is a good level, but would you still go in now? Would you still top up on those, even though they've pulled back a bit, but not all the way back down to a sub 20 level? Is that still an opportunity? Otherwise, don't you end up just expanding the number of stocks?
No, exactly. Yes, I've got to be careful of that, and I have to do that. So what I'll do is have, I don't think I was looking the other day, and I'm going to redo that spreadsheet. I don't think you need even 10 stocks. I was saying last week, if you got less than 20, 30 million, I think literally you can do with 30,000. Sorry, not 30 million. 30 million. If you got less than say 30,000 in your pot.
If you've got less than 30 million in your portfolio, you shouldn't be listening to this.
Yeah. If you got less than 30,000 to invest, and I assume that's a lot of people, then you don't need 10 stocks. Honestly, if you want diversification, buy a fund. So that, literally have that take up like 20% of your portfolio, and then concentrate on 3 stocks or whatever. Three or 5. Yeah, you don't need. It's about. You can't if you're a proper job and you've got to work 9 to 5 and you've got other things to do. You can't focus and do proper deep research, and you can't. You need to be what's they call them? Those guys at a sniper. You can't be a sniper on 20 stocks, and you can't really. Like I said, Warren Buffett says, diversification is for the ignorant, basically. You can't get the reward you want if you're not paid to take on the risk. But you've got to do some deep research.
As it stands, I would say none of your stocks in your portfolio are below 20 million now.
I know, but they've come from that, haven't they? Like,
but I'm going to get an answer out of you, even if it kills me.
Yeah.
But
okay. Well,
how do you top up? Are you going to top up on them, or are you looking elsewhere for the next big thing? And that's going to be like a 10 million market.
I'm not topping up in any of my stocks. I've got plenty left.
Okay.
So listen, I've got for example, Escape Hunt. I'm fully exposed to that. But I still believe they're undervalued.
The company.
Yeah, so I still believe they're undervalued. So they're 25 million market cap. I believe they're worth 3 million per site, and they'll be worth probably more than that when they're. But the bigger they grow, it'll be worth more than that. Yeah. So what's 18 times 3?
54.
54. They should be worth 54 million now, and they're worth 25. Right. And they will be. The economy's opening up. You watch, sooner or later, this will pop and go bananas, and then they'll be at a premium to those sites. And so I think 3 million per site, and so you get 50 sites times 350 million. They've got a clear roadmap. That's why I'm not de-risked. I don't see any other company with that clear roadmap that's going. They're going to do it, and it's like, do you know what? If someone said to you now, do you want like a 5-bagger nailed on? That's as close as I can get to a 5-bagger nailed on that I know that they've said, basically, we're going to do this, and this is how we're going to get there. And that's
they've also got management that seem to actually know what they're doing as well. They seem like a decent, steady pair of hands on a company.
Yes, so that's that. Polarean again. I don't see any more risk now. No point in selling now because all the risk is removed. They've got the cash. They're going to the FDA date. FDA, that company could be, like I said, £1 billion company. I was going to say quite easily, not quite easily, but they could do it. They've got the potential. They've got the tech there. The market's big enough. They've got everything there. They've got the management. They've got again the board and the shareholders of that company are in that space. They're experts, they're specialists in that space. They know what they're doing. So it's always good people researching companies. But when I see people questioning certain parts of the market, and hang on, guys, the experts work with this company. They know what they're doing. They're not deluded. They know what they're doing. Just rely on them to a certain extent. You can focus on things really sometimes irrelevant. Ilika again, very hot space, solid state batteries. I'm happy with that. On the market, I'm waiting for that to re-rate sometimes. This drip of the sellers is annoying. And I think sooner or later, once Jason starts doing a bit of, because he's holding off a little bit. I think we're waiting for some figures or whatever. I think he wants to do 100 days in the office. Apparently, we've contacted them. Vox has contacted them. He wants to do 100 days. It's almost like to separate his work from the previous, CEO to show what he's achieved. I think so. 100 days is long enough. But then once he starts doing promotion, I think it'll help because I think he's doing the right thing. That Glanty thing is it's quite impressive. Did you see that Glanty deal he did? They bought that software.
Yeah, I didn't understand it though. What was it?
Well, if you look at TechLet, right, it's essentially, I'll go to the website here, but it's from a low base, but it's grown very quickly. And if you go to techlet.com, Techlet offers huge benefits to letting agents. Ask us for a free trial. But it says basically it's in the cloud, automated. So every documentation you need when you're letting, it's all paperless. It's all be done automated. So they say keeps your branches open 24/7, 365. Remove up to 80% of the actions needed to create a tenancy. So basically, it's all automated. So it doesn't matter when someone comes. If someone comes home from work and they're about to let a new flat, and they obviously come home from work and they can't deal with it during the work hours, they can just do it via the website. At night if they want to, and they sort out all the documentation. And it's basically
That's
automation.
clever.
Yeah, and Jason said all we need to do if we up our average revenue per advertiser by £100, which we can do with this because once it's in and the agencies are using it, it's very sticky and it removes all the crap jobs you don't want to do, it chasing documentation and all that stuff, and references. It does it all for you pretty much. So he said we do that. Increase our rate by £100 per advertiser, and at the moment the average is £133 per advertiser. So that's be a huge upside, so that would be like 40 million in revenue a year. Now they're on 22, 23 million. So he said this will help, and these things like this, tech side of the business will help. So yeah, it's just at the moment which is annoying. I think what you get is like sellers, maybe legacy agents, maybe just selling stock, and because it's very low liquidity, it affects the share price. But sooner or later, it'll go. It's one of those things that you lose patience, jump out, and it'll go to the moon.
Yeah.
I missed that.
I know you're saying you're not topping up, but that's one where I'm thinking now, I'm going, well, this might be where I might put a little bit more in, average down, and because it's a 65 million market cap, and as we talked, in its sector, it's undervalued, isn't it? At that.
Yeah,
I would say.
Yeah.
Okay.
And I think it'll do well. And like I say, it's growing.
Yeah.
That's one of the things you've got to look. That's proof in the pudding. Whenever you're doing research on any company, look at if it's growing. But the reason why I'm not topping up is I want spare funds. I've spotted 3 little stocks I quite like.
Right.
One of them, and one of them is growing very well. And the other way, in fact, they all are growing. That's what we're going to look at. Growth. And why growth? Because that's what it's all about. That just proves if there's demand for the product, And I look at rates.
For those of us who have a portfolio under 30 million, like you've just described all the stocks there, but then also given us reasons why we should keep them. I'm sort of like, when we have this conversation, I'm always like, I completely agree that having less stocks is going to give me a better opportunity to grow my portfolio, but also less opportunity to lose money. But then going from the 7 stocks I've got down to 3 or 4, I'm not sure where to do that, because I can make a case for all of them.
Yeah, no, you can. Yeah, but again, it's hard. But that makes you really look at your portfolio and redo some research. Not a bad thing. And if you're going to reallocate, you're going to make sure pretty much, like 2 to 1 chances that the one you're going to put money into is going to move faster than the one you're leaving. Because you've got to be really sure. Don't just jump from 1 to 1, and that's where And it's always easy to chase the new shiny thing, and then miss out on the someone actually in the. I've got to say, this week, by the way, it's the last chance you have to get on in the membership club for £99. It goes doubles after this week. That's it. Early bird deal done.
How do we sign up, Justin?
Oh, thanks for asking, Pete. Go to sharepickers.com.
Right.
But someone said there, so I'm worried now the bounce is on, if we've had the sell-off now and we're in for a nice rally towards the opening of the economy, that I'm in the wrong stocks. And you can always say that. I mean, and I said, it's like a supermarket checkout queue. You can guarantee if you see another queue moving faster than yours, you move to that queue, and all of a sudden the cashier changes on the queue you jumped into, and big chunky lad sits down. He looks really slow, rather than this middle-aged lady who's been really whipping through it. Oh my God! And so you went to go back to the other queue, and a family of 10 jumps in your place, and they got a trolley stacked to the rafters. Oh my! So literally, sometimes you just got to be patient.
And I've said it before. If anyone out there plays fantasy football, they will relate to it. The moment you sell Harry Kane, he scores a hat trick.
Yeah.
It's like, oh, come on. Yeah.
So
exactly.
I'm not just have conviction. It will work. I mean, does your stock? To us, been like I said, Gfinity has been very frustrating. But there's a technical reason it's been frustrating. There's been sellers and their warrants and I point to this that business is improving. The share price is of course related to the business. But when you have technical issues like warrants and all that stuff, it doesn't give a good reflection of the business. The business is growing, it's getting better. This week we'll have interims out. I don't expect them to go gangbusters on the revenue because it's a transitional year for them. That John, it's almost like it's the first full year this will be that John's been in charge and he's changed the strategy around, gone for profitability, but big cash burn. He's really focused the business into 3 areas. Digital media business will take a while. It's one of those flywheels. It's build up a bit of energy. Once it's going though, it just picks up. Just add to it and add to it. It'll be chucking out good revenue, got massive margins of 70% plus on the digital media side, and they've got communities there. Basically, all you do is add content, and the communities will always show up, and you get advertising revenue off it. So he's going for that, and his model was Future PLC, the company called Future PLC, which is more a new media publishing company. The margins are very good. It's 1.5 billion market valuation. The growth has been like 10 bagged in the last 6 years. So he's going for that model, but he's also in the esports space, so he's been a publisher or just engaged geeky communities like that. And that's a very hot space. But also he's got, co-owned stuff, like they do the V10R League, and then they're helping other people, the service provider, pretty much by putting an E-Premier League and all that stuff and E-Formula 1. So I think they're a very hot space, but the share price isn't showing it. And they're only, 30 million market cap. And I think you get a profitable, growing esports company, sort of new digital, it's going to be worth a lot more than that. I see crap resource companies worth 100 million. Yeah. They got nothing. They got a couple of PEAs they've done, or scoping study, and they're worth 100 million or something. What? So I think towards October, you'll have less warrants being sold because that's the expiration date of the warrants. So people want to, take the option there for their warrants in that big fundraise, because they did a big fundraise back last year where 2.5 million, 2.25 million of warrants are out there. Now, the sooner we get that, you'll have the selling going down, operational news after the interims, because that's all you'll have now for 9 months. There's no financial statements for 9 months now. So operational positivity, buying picking up, selling drying up, and the result will be the share price going up. Because that's all it's about. It's buys and sells, talk about share price on the back of improving business. Why would you buy a company? Because it's improving, and that's what's going to happen. So I think, hold on for it. It's almost this year, we'll see a big change in Gfinity, I think, transitional year.
Well, and that's the other thing to say about the sell-off recently this week, and obviously looking at your portfolio, or my portfolio, look at my portfolio, none of the stories have changed. Like, they're the same companies they were this time last week, and the prospects are the same across the board. I don't see there's any difference. So it's just hold on.
Yeah, and it's just, which is the thing is, it's like if you invest in a listed company, you would know when there's, you don't see the volatility or the issues there. But if the business is still improving, like I said, Steve's hairdresser, if you had Steve's hairdresser doing well, Steve is a hairdresser, has a little salon and it's going gangbusters, and you invest in it, you'd be happy. Now, if you went to talk to John, down at Gfinity, and see everything that's going on there, you'd be happy, Yeah. But then you look at the share price, hang on a sec, it's going down, the share price is going down. So what? That's not the business. Yeah. There's a technical side to that.
It's worth the reviewing, though, isn't it? Like, the thing that transformed my portfolio over the last year was weirdly getting rid of the fund and then reinvesting that cash in some faster moving stocks. And because I'm not investing 30 million, maybe just being a little bit more focused on stocks that are going to move faster is important, so that I can get to 30 million quicker.
Okay, so simple as this. Simple as this, Pad. Look at the bigger stocks. Dump them. Simple as that. That's all I said. If you're simple, honestly, the bigger the market cap is, dump it. And unless you see 100 bagger still, or whatever.
I'm looking at Polarean and thinking, like, I top sliced that a while back, but actually, is now a time to actually buy more of that? Like, although we've seen a huge re-rate there over the time that we've owned it, actually, is there more potential? There's like a really simple option over the next, between now and October, that's going to start to really build. Somewhere to put more money?
Yeah, could do, but I still look at that. I mean, I don't know how far. Listen, it's not I think I see it rising. I don't know how far. I don't know how far it'll rise. I have no idea, But will it double? Will it triple? I mean, I think now is when they'll start. Ramping up. If they need to do a bit of publicity, really, a bit more. But I mean, share prices start going nuts. Like it happened with Polarean before. It started going upwards, didn't it? Before the phase 3 trial came out, and then nothing happened with the phase 3 trial. So it'll rally towards that, I think. But Who knows? I just think, you know,
at least there we know there's news coming, and we're sort of vaguely sure that it's going to be positive. Whereas with IKEA, like, we know that the news is positive, and we know that the story will be good over the next 5-10 years or whatever. But it's hard to pinpoint a reason why that's going to change dramatically in the short term, isn't it?
Yeah, but it depends. Like I said, it depends how much you got in it. You can always top slice, you know. I mean, because you could do a doubler on a small, tiny cap quite easily, and then still hold a little bit in the bigger one that's going to move much nicely, you know. So you can always do a top slice a bit.
Should we explain to people that when Paddy says IKEA, he means Ilika?
Yeah, Ilika. Yeah,
because it's not IKEA. Because people go, IKEA, is that an interesting one? Yeah. No, it's hard, isn't it, Paddy? I get it. The only thing I was going to say...
Sorry, Pete, but Justin just completely contradicted himself there by saying that we should have a little bit in a big stock and then keep the money in, like either
I know. But you know what? That's why. Listen, that's why I say to people, right? Get involved in investing, right? Because get involved in, because there's no other way you can generate, unless you own a successful business, right? There's no other way you can generate decent wealth. Unless you have a share of a business, that's investing. If you sit in a 9-to-5 job, I can genuinely look at my money here, right, and in my stocks and shares ISA account, and say, okay, listen, do you know what? I fancy moving a house in a bit, and I want a nice, decent, chunky house, because our house is quite modest. There's no mortgage on it, of course, but I mean, I wouldn't mind a nice big house now for the rest of my life, a big, chunky, impressive house. And I think, do you know what? That's my goal. So I want to buy a house for, say, 1.5 million, right? No mortgage. So I've got to work out how I'm going to get to that. I'm going to get to that, right? Now, I don't want to get rid of just sell all my stocks. I want to have a decent chunk of stocks, and I want to buy that house. So I got say I got 500,000 in my house here. So all I need is 1 million. So how do I get that? And you just work out, how do I double to that? How do I get that? So look at the money you want and work backwards. So how much do you actually... And you can't do that. If you're working in a 9-to-5 job, right, you can't do that. You can't say, can I work a couple more hours and generate you can't do that.
Can you give me £1 million, please?
Yeah, you can't work a couple more hours.
Watch out for the council tax on those big houses. Just.
No, I know, but you know what I'm saying? If you want to generate real wealth, there is a way of doing it in the stock market. And that's why I love it so much. It gives you so much opportunity to transform your wealth. But you've got to know what you're doing, but it takes time to learn about it. But that's a lifelong skill. It's only you in the market. At the end of the day, if you want to make money, the market's always going to be there. It's gone through world wars. It's always going to be there. So if you get good at it, you can earn money as long as you've got a computer. The market's always there. Just learn about it. And so how much do you want? Let's say Pete, say you want to retire, right? Let's get a calculator out. I always love my calculator. It's one of my most used apps on my thing.
I was thinking about buying a proper one this week.
Yeah.
Like a proper accountant's one. Yeah, I'm with these on my phone.
No, I like it on I like it on my desktop. So how much do you want a year, Pete, when you retire? So when you get to 65, say I don't know when you're going to stop working, but how much would you like a year?
I have no idea.
Say 50 grand, yeah? Say 50 grand a year. That's nice, isn't it? Right? So how long will you die? When will you die? What's the average rate? I mean,
66, probably.
Anyway, I know we need 50 grand. Perfect.
Done. Yeah.
Let's say you live for 20 years, right?
Yeah.
That's easy math to do, isn't it? So you need £1 million quid. Obviously, you've got inflation there, so let's just add that in for, say, 1.1 million, right? But let's say $1 million. So you look at your portfolio now, entire value, right, and say, right, how do I get to $1 million?
Quite far off that.
No, but how do I get... But remember, right, you don't have to actually earn that yet, because you'll still be investing when you're 65. And you'll be better at it. So let's say you go for half that then, because if I get half that, I can double that in the next 3 years. I can still be earning money in those 20 years before I die. So you don't need to get to $1 million.
I'm assuming this bazooka house you're buying will have like an annex where me, Paddy and Steve can come and live.
Yeah.
Bunkers.
Yeah, so my overheads will be quite low by then, so that'd be quite cool.
All I'm saying is set a goal, right? This is if you want to multiply your... Paddy, and this is back to culling stocks. Can you get to that figure you want, holding the stocks you hold, looking at it realistically? So if you go for even one stock, so I'm going to go all in on one stock, I have complete faith in it and do deep research. Of course, a left field event can come along and wipe you out, so you shouldn't have one stock. But keeping it simple, right? So
should I have one stock?
Yeah. Well, no, it depends.
No, I'm serious. Like if my plan is to change the amount of money I've invested into something, I mean, it's a chunky amount, but it's not something that you could really use for anything
Right.
other than
So
a rainy day.
Let's say you have one stock and one fund. That way, you're not putting it all in, unless you want to go all in. So 50% in one stock, 50% in a fund, right? That fund, depending on what it is, say the Vanguard fund, has got 1,300 stocks in it. That's well diversified. So go for one stock and say you want to double. Where are you going to look? I'd look sub 20 million, sub 10 million probably. But like I said, it's like diamond mining, right? You've got a lot of dirt to excavate and get through and crap to get out before you find the diamond. But once you've found it, now I do this a lot. I
Diamond
find
mining. What's the ticker?
Yeah. But it's like sometimes I find a stock I'm convinced, and I'll get there. It doesn't happen very often. Like a lot of stocks in my portfolio, I'm going to say they'll do okay, but I wasn't convinced on them massively, and I would have put all my portfolio in them. Like with Gfinity at that point, they're low, and Escape Hunt. I was almost convinced there was upside there. There was very little downside going on, and I would be happy to put half my portfolio into that stage.
All right. Well, then looking at Gfinity, like they've had a big dip this week. I mean, they're not back where we were.
They're not sub 20 million.
But they're not.
I'm talking about if you want to double your money very quickly, they'll grow very quickly, I think, and they'll go. But I'm talking about almost sub 10 million here because it can double. Yeah, it can double before it gets to 20 million. That's when the fast, easy money happens. You can double before it's even a 20 million market cap. It's like, look at now, Escape Hunt, right? It's what, 3 times, it's done 3, it started at 7 million market cap. So it's done 3 times and it's still sub 25 million. It's still potential. That's what you want. You want to double a trebler before it even gets to 30 million. That's what you want. Wow. And there's still potential. Plenty of potential.
I don't think I own any that are...
I got a couple.
But Justin, on that point, I get the theory and the mapping it out and go, yes, I want £1 million, please. I get it, and it is a good idea, but it's pretty difficult. Well, yeah, virtually impossible to kind of marry that up with success in the market. It's like,
no, it's not. I mean, think about it, right? As you get better, you see opportunities. You understand, where they are and where the winners come from. You can do it.
Yeah.
Listen. I've gone from that to. I went from. I started off with, like I said, 30 grand I had from a house flat sale in London Bridge. I halved that in that financial crash.
Yeah, I do remember that. Yeah.
And then I've gone now above 7 figures. So it can be done, but you have to know how to do it. And so sometimes I think we are too. And I don't want everyone to go nuts now, go all in on one stock. But I think we by nature. We are a bit too risk averse anyway. I know, cautious. I think most new investors, some don't, have too many stocks and are too worried because they don't.
This is not investment advice. Do your own research. I agree. Because I look at my portfolio, and like I said the other week, having a diversified portfolio helped me a little bit. It's sheltered me a little bit from some of the drops because my oil and gas stocks have done better recently and all that. But overall growth, I'm happy with. But yeah, of course, if I had 3 or 4 stocks, and if I'd put 30% of my portfolio into Escape Hunt rather than like 10%, of course it would be different.
Well, that's exactly that's
hindsight.
Yeah, I know. Well, the thing is, I mean, I was at the time, one of the portfolio transformers for me was Bidstack, and I was at the point where it was sub 10 million. It was sub 10 million. It was very exciting tech. It was a very exciting area of the market. They had cash. There was people getting very excited about it. So I knew at that point, I was so excited about it. I thought there's going to be a massive area here to make money. They're right in the sweet spot in between gamers and publishers, and the gaming market's blowing up. So I went sort of big on that, and that transformed my portfolio. Yeah. And then all of a sudden they came out with that revenue update, and I thought they were going to be doing 5 million for the year, and they end up doing 30 grand. What? Yeah. Sell! And so I started selling there because, of course, I went from
and you selling all of that transformed my portfolio.
I know.
Yeah, quite.
But why wouldn't you hit the selling button as well? Because the story wasn't the story wasn't panning out, as they said. I bought into that company thinking they're going to do 5 million the first year of the market. That is amazing on new tech. And this is like going to be a unicorn, if they can do that. And then all of a sudden, no, it didn't really pan out. So, and there's certain opportunities like that. I mean, I still see him, there's a couple of small tiddlers there that I'm looking at the moment, and I see them being very bigger than they are now, but they're not. And I think, okay, very interesting. And then when I see those, I start, top slicing other stocks I have, a little bit, bigger stocks, to find the cash for him. But ISA is coming up, isn't it? If you've got spare cash, you can put some ISA. Are you topped out in your ISA, or can you put more in this year?
Oh, me? I could put loads more in. I just don't have any money.
Yeah. Pete.
Yes, I am topped out.
Well, I think that'll help the markets as well, though. I think
me putting a bit more in my ISA.
Go on, Pete.
Yeah, definitely.
Really?
I'm in.
Yeah.
No, but you know what I'm saying? Everyone, with a little bit of cash, there's still people, who are investing and don't have stocks to use ISA. And I think, what are you doing?
What are they doing?
Why are they putting in a normal one? So get your ISA started. That's day one basics. Get your ISA going.
But before Wednesday. Sorry, not Wednesday. Sorry, the 5th, isn't it? Following week. Yeah.
Yes. So anyway, let's go through this quickly on companies. So Gfinity results out hopefully this week. Interims. Listen, I expect to see the margins improving. The top line will not go gangbusters yet because they got previously legacy business and that was chunky revenue. But they weren't making any money on it. That's why John decided to reshuffle everything. But now, I think this year we'll start to see a transformation because you will have, the margins going up. Also, then the revenue will start growing this year, next year, and the year after. And it's the start of a good year. And warrants expiring, people buying, all that stuff. So I think it'll do well. So, again, best time to buy on a transitional company is after interims because it's a long period without financial results coming out. The longest is all just operational stuff, all good news, and of course double whammy where you got the warrants expiring on Gfinity, business improving, and some more buyers coming in. So I think that I don't know what's going to. They're going to be doing something on the formal sales process. They've got to update on that very soon because it's been a while now. But I know that last deal they did. What was the last deal? Which was quite a big deal. That came about because of the formal sale process, I think. Where is it? What was it? Last deal with the big
they
company?
They were managing something for someone, weren't they?
Oh, yeah. Iconic, yeah.
Oh,
so they are the platform of...
the Map Genie thing.
Konami. No, Map Genie's after that. But Konami, the Gfinity appointed for official esports and gaming partner for Iconic. And John says in that...
okay.
He says in that... what is the episode? Commercially, this is one of the largest deals in Gfinity's history, and the team is ready to deliver outstanding results. So that's a big deal. I think that came via the formal sales process. So close that up. Remove the uncertainty around that. Hopefully, interim results out, and then it's marching uphill. Then the share price. It's been very frustrating, but hopefully that'll go forward and we'll move on. Trufin, did you see that? Paul Hill, right? He's a very experienced investor. He's done it for years. Done very well. On the Friday we do the podcast and a video, and together, so we do both. It's the same thing, but you can see with the video you can see charts. I put charts up and stuff. He knows all about this kind of stuff, right? And I talked about Trufin. First of all, the PlayStack, of course, it's doubled in revenue, 14 million last year. Satago is the invoicing automation software for small businesses that's been trialled by Lloyd's, and it doesn't sound like a trial. It sounds like Lloyd's going to go ahead with it pretty much. And he said, what's going to happen there? Lloyd's will buy that. Simple as that. Lloyd's will buy that side of the business. If it works for them, they'll buy it. So they're going to, so already Trufin got 15 million in cash. They're going to be selling off probably Virtus and Oxygen. So they'll have a big chunk of cash probably and PlayStack. It'll be a hot gaming company with a big chunk of cash. And they'll probably return cash to shareholders, I think. So I don't think they'll have they won't have more than 2 companies in Trufin this time next year probably. So I see things happening that very, very bright. Next week, the week after next, it's 2 weeks, haven't we, till we get the first opening of the economy for the UK. That means outdoor events can happen. That means people can do AR, VR if they want with Escape Hunt. But then a month after that, then we've got the full economy going. I think Escape Hunt's share price will start rising because it's all about sentiment and momentum. It's the journey is more exciting than the destination. I think we'll start seeing a rise in a lot of stocks, including, leisure, hospitality, Escape Hunt's in that, and they're a lot bigger now. Like, what are they? Something 70% now bigger estate than they were when they locked down. They've got a digital side of the business. I see this being honestly 150 million market cap plus within 3-5 years. And it's just people worrying about,
and
anyway.
And the thing as well, foreign holidays aren't going to happen, so
exactly.
domestic pleasure is going to be way higher, isn't it?
Yeah, absolutely. You know what? I think I see it being like that for a while. I know Safe Stay. I used to. They've selling off a couple of things. But
it was interesting, wasn't it?
Yeah, they're selling
not
off
going back to the shareholders, but selling some property instead.
Yeah. Well, that says to me that they see this issue, because I assume people who even just travelling hostels over here are from abroad. That area of the market, that travelling and all that stuff, is going to be delayed for a while, because Europe are way behind. Do you see the stats on the? I tweet this out actually. Look at per 100 people of vaccinations in the UK, US. Oh yeah. So the Europe is so far behind. So the UK have done 44.7 people per 100 they vaccinated. The US done 37. Europe 12. So it's like, guys, we need to catch up really, because we're not going to want now. People going on foreign holidays when actually they're going to bring back different variants. Different variants. There's variants of this. Nicola Sturgeon always says. I did hate Nicola Sturgeon.
Oh, there we go.
But now I saw her saying,
"Hit the tangent alarm, Pete."
Yeah. No, I did see her saying that. She said, "What did she say? Come on, Scotland team. Let's do this for our friends in Wales." She tweeted that yesterday, and I quite like it. But we got to be careful.
Wow, you are easily swung, aren't you?
Different variants. Yeah. But no, so we're not going to open up our economy to people with different variants, are we? So travelling and holidays.
It hasn't stopped us for the last year.
I know, but no, now they've got a head start and a bit of a backwind, a strong wind behind us on the vaccination front. We're going in the right direction. I think, if anything now, Boris is going to want that to be his legacy. The mess-ups and the muck-ups they've done with lockdowns previously, and the U-turns and last-minute, too late decisions. They've messed up everywhere. The one thing they've got right, because it's not in his hands, it's in the NHS hands, is like the vaccinations. Yeah. And I think he's going to want that to be his legacy. He's not going to want to mess that up. And I think we're going to be very strict on travel. So we're going to have the domestic economy booming, and yet travel and all that stuff not booming, because
the word you wanted there was tailwind, not backwind. Backwind, that's something different.
Tailwind. Yeah.
That's it.
Any other stocks worth looking at?
Any other news? Any other?
News? No.
Are we going to try and call Steve?
Oh yeah. Let's Steve. Yeah.
So Steve's in Brecon, or on the Brecon Beacons, out walking.
He was climbing his mountain, or is he? Reckons he's finished climbing the mountain by now.
He's sheep spotting.
That's what they call it.
Steve, a chat every year ago. That can't be right, can it? West 18, is it? By the way, TV recommendations, not the line of duty. That was dreadful. We watched for 10 minutes of that rubbish. Switched it straight off. It's rubbish. Absolutely.
It was a bit of a slow start, but the second half of that first episode was definitely better.
He thought a Down syndrome guy had been doing the crime.
He's the only person in the flat, so that's
But they were treating
at least.
They were treating like a suspect. They're like, are you stupid? Are you absolutely? And they're so slow. The girl, I didn't realise the girl was the Scottish girl. Is the girl from Trainspotting? Do you remember the Trainspotting scene where
Kelly MacDonald?
Yeah, he takes a girl home, and
yes,
she was in Giri Hadji as well.
Yes, she was.
I was hoping it was going to be the same character.
Yeah. Anyway, I've gone back. Couldn't find anything on. I was
hoping it's going to be the same character. Okay.
Yeah. Well, why not? Like a little crossover.
I've gone back to
and Trainspotting as well.
Yeah. So do you know what? TV-wise this week, I've gone back to Louis Theroux interviews, and I've watched him it's quite a few good interviews. He's done one. I didn't realise this. He did one with the tiger guy, the crazy tigers in America. Lots of people have these big tigers, but Joey Exotic, it's called. He talked to him, and that's a bit mad. But also, there's two, one is very heartwarming. It's on autistic kids, right? One is amazing. It's worth watching that, Louis Theroux with his autistic kids. It's phenomenal. There's one kid, unintentionally, it's quite funny as well. There are bits of it that are quite funny. But and then he goes to dementia as well. The next episode is dementia, and it's also hilarious, unintentionally. But he talks to this one lady. He said, "Jean, do you forget things?" "Not very much." and she was playing ball with her. She's kissing the ball, right? And he said, "What are you kissing the ball for?" He's a nice fella. And it's like you couldn't write it, But it's lovely because the couples looking after these people with dementia. Or this one guy's he's 69. He's in his dental in his home, and he's packing up to go home every night. And and he doesn't recognise his wife, and he's having an affair with this other woman who fancies him. So his wife comes to take him out for lunch, and this other woman tags along holding his hand. It's a really an odd situation, But it's this other lady who's young. She's got dementia. She's about 49, and she knows she's losing it, but she doesn't. But she doesn't want to admit it. But she just laughs and everything, pretends it's an excuse or it's a bit of a laugh, like she's doing it for a laugh. But it's just worth watching. I was captivated by it. But the thing is, oddly, I'm sure I've seen that before. That episode on dementia.
Right, okay.
And I can't remember it. I vaguely remember it. But I used to watch all Louis Theroux stuff, and it's very good. I do like Louis Theroux,
Yeah, I think, good. We're getting that.
Is there anything you'd recommend?
MasterChef's back on.
Okay.
Yeah. Pat, do you know what you remind me of? Ramesh Ranganathan. Is that his name?
Thanks,
Did he remind you of that a bit? Just
Yeah.
a bit? Yeah. That's
I don't know why.
dry.
He's very funny.
Yeah, do you like him? He's good, isn't he? Yeah. Anything you recommend, boys? Six Nations I recommend watching in.
What, the whole thing?
The whole thing from the start.
Don't worry about that. Let's forget about that. Move on from that.
And what the Six Nations proves is if you've got one more player than every team you play, then you tend to win.
Yeah.
Yeah.
But, Pat, you made the point on our WhatsApp group that Scotland were a handful of points away from winning, and I thought, were you? And I looked back and thought, because you lost to Wales by like a point and Ireland by 2 points or something.
But the same last year as well. We were really close. It came down to that dreadful weather in Edinburgh against England, and we were really close against Ireland. I mean, they went away and won it by a few in the end, but right up until I can't remember what minute it was really tight. Like Scotland could win the Six Nations. Yeah. If Wales can win it, then Jesus.
But hang on, that's how it works. You say you're a couple of points away from winning it. You say you lost against Wales, but if that's how you lose.
No, I know exactly, but
it's like
they're not good enough, and that's why they come fourth.
No, but to be fair, I think on sides of the big surprises this year, let's be honest, were three surprises. Wales won, coming from nowhere when they looked dreadful at the end of the last Six Nations. Secondly, how good Scotland are, and how close they, like I say, come to winning. And thirdly, how rubbish England were. What? Boys, what's going on here?
Strange times, guys. Like I said to you guys, enjoy the moment. Just enjoy this.
I know.
It's
do you know what? In fact, Paddy again, for a bit of wisdom here, he did say, well, look how fast it can change. Wales were rubbish, This year they were rubbish. And they win the Six Nations, so that's how fast it can change. And
it's one of the reasons why I love rugby, but also why sometimes also have to sort of like see it as a little bit crazy. Teams can transform themselves in the space of 6 months and suddenly go from being absolutely rubbish at a World Cup to winning a major tournament.
No. You know what? I was watching rugby once at Megan's mother's house, and her brother popped in. He's all Essex lad, All right, he's watching, and he's obviously a Tottenham supporter. And he's watching. I was watching Wales then play England, and he just didn't get it at all. He said, "What? It's just a load of bandles, isn't it? Everyone's just bandling on. What's going on?" He said, "What are you doing?" He says, "This is a mess, isn't it? Everyone's just bandling on top of each other." And I said, "No." And as I was seeing it, I was seeing what he was saying. It is really. Everyone's jumping on top of each other, chucking the ball out, then jumping on top of each other again. That's what it was. Just bandling on.
It's a really bizarre, complicated, confusing rules.
I know. Bando! Jump on, mate! Yeah! That's what it was. But I enjoyed it. Lovely. I couldn't get hold of Steve. I don't know if I'm on the wrong thing, but he's obviously deep in the Brecon Beacons. It's probably no reception in the Brecon Beacons actually. Okay. All right, lads. Well, have a nice weekend, and we'll speak to you next week.
Nice one. Bye.
The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.